Hello and welcome to today's webinar. A little housekeeping before we begin. Everyone is muted during the webinar. All webinars will be recorded and sent to all attendees after the webinar has concluded. Tomorrow, the recorded webinar will be sent to all participants. There will be Q&A at the end of the presentation, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. Once the presentation concludes, I will ask the questions presented in the Q&A box. I may not get to everyone's questions, but we will do our best. With that being said, I would like to introduce you to Ruben Franco, President and CEO of the Orange County Hispanic Chamber of Commerce.
Hello, everybody, and thank you for joining us in today's call with Experian Credit Education. The Orange County Hispanic Chamber of Commerce has been around 35 years. We're celebrating our 35th anniversary this year. We are a small business development center host as well, one of only 4 Hispanic chambers in the country to do so. We'd like to bring the resources of small business to you and to help your businesses grow and start and succeed and get funding and whatever it is that you may need. Those services are provided for free, no cost, because of our grants with the SBA, our grants with the governor's office, and our grants with partners such as Experian and Wells Fargo and others who help support our small businesses. So without further ado, I'd love to introduce to you our great partner, Experian, and Veronica Herrera. We've been working for Experian since 2002, great expert in credit, and she will give you a phenomenal webinar here on credit. So Veronica, take it away.
Thanks so much, Ruben. All right. Good morning, everyone. My name is Veronica Herrera. I'm the Director of Product Solutions at Experian. Basically, I work with lenders of all sizes, and I work with them to understand credit data, credit scores, and the analytical tools that we build here. I have firsthand knowledge of how lending decisions are typically made by our lenders, large and small, as well as I am the keeper of the specifications for our modeling. So I know the secret sauce to most credit scores. That's pretty important. Before we start today, I do need to read this disclosure. Let me get through this real quick, and then we'll get started with the presentation. The purpose of this presentation is to help you better understand credit reporting and to provide general information about how you can manage your credit report so you can get the credit that you need and want. For legal reasons, I cannot discuss issues specific to your personal or business credit report. I cannot advise individuals on how to improve personal or business credit report or credit scores, and I cannot submit disputes regarding your personal or business credit report on your behalf. Information regarding Experian policies and processes is current as of the date of this presentation, but may change. Basically, I don't have access to your credit reports, both business or personal, so I can't change anything or do anything about them. But we can definitely talk about the things that go into your credit reports, and I will give you kind of step-by-step instructions on what you can do to check your credit report, fix any errors, and that sort of thing. This presentation is broken up into kind of two parts, right? We're going to understand your personal credit report. So this is the credit report that you have in your name as an individual. And I'm also going to talk about, later on in the presentation, we'll talk about business credit reporting. So this is the credit report that is assigned to your business as opposed to you as an individual person. And we're going to kind of discuss the differences between the two. Sometimes there's a little bit of blending that goes on there. So I want to explain how these are different, and also how sometimes there is some crossover. But the important thing is to kind of understand how to manage both of them and what to do to access both and to help both of them grow. And that's what we're going to talk about today. Let's start with personal credit reports for 2 reasons. One, it's usually what most people are interested in. And also, typically, even if you are using credit to kind of support your business, you're going to usually start with your personal credit report and your personal credit as you move on to a business credit. So let's start with this first. At a high level, what is a credit report? It is essentially, it's a record of all your financial accounts and obligations, right? It is a long history of everything that has been reported in you through the lenders, and it is credit related. And the reason I say that is things that are not credit related, such as your banking information, your investments, and some other things that are not related to credit, to extensions of loans, they're not going to be included. So this is definitely credit related. Throughout this presentation, when I say credit report, credit file, or credit history, it's all the same thing. I'm talking about this record or this database of information on your account that is being accumulated, and that can be used by lenders and by you yourself to check and see what your kind of credit history, credit, check the pulse of your credit, if you will. Okay, what's in a credit report? All credit reports have very similar information. There are 3 credit reporting agencies. There are the 3 big ones, which are Experian, Equifax, and TransUnion. If you look at your credit report, you'll see that they all have very, very similar information. So all credit reports are kind of set up in a very similar fashion. Each of the 3 bureaus has their own kind of nuances, but overall, the information is, we have what's known as identifying information, or the header information. That's where we keep things like your name, address, date of birth, social security number, employer. This information is just to find out who you are, to make sure that we are talking about a specific individual. There are, just name by itself is not sufficient to identify you. So you need lots of pieces of information to find out whose credit report we're actually accessing. Be aware that information from the header is not used in credit decisions. So you cannot be declined, for example, because of your last name or your date, your age, or where you live. Those are things that cannot be included in credit decisions. Only information that can be included in credit decisions are things like account information, which is the next section. The account information section of a credit report holds all of your trade lines, all of your accounts. So credit cards, student loans, mortgages, auto loans, personal loans, anything that you take out can be reported to the credit bureau, and it would be found under this account information section. It usually has things like the name of the account, what type of account is it, right? Is it a credit card or is it an auto loan? What was the loan amount for? How much have you been paying? And of course, very important, whether or not you're paying on time, right? A big portion of what a credit history is for is to see whether or not you, as an account holder, if you're paying your bills on time. Other information besides your account information would include public record bankruptcies. This is not reported by the lenders, it's reported by the courts. You can include trades in your bankruptcy, but this is when if you ever file for bankruptcy, then the court will report that bankruptcy to the bureaus, and you would see this record in the public records section. Below the public records section, there's an area called inquiries. This is where we record every time anyone even takes a look at your credit report, including you. We will record anyone who's looking at your credit report for whatever reason. And we will then display it to you so you can see who's looking at it. And to a certain extent, we display some of them, not all of them, but some of the inquiries to other lenders who are looking at your credit report, who have permission to look at your credit report. They will see who else is looking to your credit report. However, they don't see everything. They only see what they need to see. When you pull your own credit report, you will see everybody who's pulling it, even when you pull it yourself. So at the very end of every credit report are instructions on how to dispute. So we count on you to look at your credit report, make sure that the information on there is correct, valid, it's yours, so that if there's anything that's wrong, right, we may not be able to tell if that information is wrong. Sometimes we can, but not always. So we rely on consumers to look at their credit report, check it periodically, and update us if there is incorrect information, false information, perhaps there's some fraudulent accounts, things like that. We rely on you to kind of help make sure that credit report is accurate. So instructions on how to do that are included at the end of every credit report. Just real quick, just to make sure that you know what is not on the credit report. A lot of people misunderstand this because there's some correlation, but this types of information, like anything that's like criminal background, even parking tickets, none of that kind of stuff, whether it's misdemeanor or felonies, none of that is in your credit report. We don't have any tracking of that, okay? Medical information, well, if you don't pay a medical bill, the bill might go on your credit report as a collection, perhaps. The medical information, the doctor information, who you went to see, what it was for, that information is not found on the credit report. Neither is your buying habits or your transactional data. So even though your credit card bills as a whole, that might be on your credit report, what you're actually using it on is not recorded. That's something that the bank might record your transactional history, but it is not in your credit report. And as I mentioned before, neither is your bank account information. So your checking account, savings account, investment accounts, those aren't loans. So it's not credit related, it's not on here. I mention this because a lot of people do kind of misunderstand the fact that a debit card is so like a plastic check, right? You're actually accessing money that's in your own checking account or perhaps savings account. It is not a loan. So if you're using a debit card, even though it has the Visa logo on it, it does not make it a credit card. And because of that, it will not help improve or build your credit. People think, oh, if I have a debit card, it's improving my credit or helping my credit. That is not the case. It's not even recorded. So you will actually use real credit accounts to build your own credit. And then finally, just so you know, credit scores are never stored, kept in your credit report. And the reason for that is that credit scores are calculated on the fly. If somebody wants to know what your credit score is, they could pull your credit report, run it through the algorithm and calculate a score, but it's only good for that moment, for that instant that you're pulling that credit report. Technically, the next credit report could change, and what your credit score could change. Credit does change over time, so there's no point in storing it, because if you need a credit score, you need to pull that credit report and calculate the score whenever it's necessary. As I mentioned, a credit history, a credit report is a record of everything that's happened, so it does stay on over time. And I mentioned this for a couple of reasons. People assume that if you, I don't know, pay a collection account or pay off a debt, that it's going to be wiped clean from your credit history, and that is not the case. Whether or not you update and pay off a loan, that will be recorded and it will show as a paid account, but it doesn't go away. It's not deleted off the credit report immediately. Some information is ultimately purged from your credit report. So there is an expiration date on certain types of information. That's the good news, right? So if you still have an account, and as long as you keep it in good standing, as long as you keep it open, that entire history will be on your credit report. So it could be your very first credit card. If you still have it and you're still paying on it, it could still be on your credit report, even if you opened it 30 years ago. But once you close an account, the history of that account will stay on for 10 more years after you close it, but eventually it does drop off. Anything that's negative, such as missed payments, late payments, collection accounts, they all have expiration dates. So if you have a missed payment on your credit report, let's say you were 30 days or 60 days past due on an account, and the lender reported that, and that's being on your credit history, right? That can drop your score, it doesn't look good. Even if you pay it, they would simply bring your account back to current. They don't delete the fact that it was 30 days past due at a given point. But after 7 years of that occurrence, it does drop off, and it drops off completely as if it never occurred. So if you have a late payment or anything negative on your credit report, it does eventually drop off completely. Same thing with bankruptcies will stay on, at least Chapter 7 bankruptcies will stay on a little bit longer, it stays on 10 years. But even these types of negative reportings on your credit report, they do have an expiration. They drop off as if they never existed. And finally, credit inquiries, those accounts of who's been looking at your credit report, they have a much shorter life. They actually drop off after 2 years. And in fact, here we start purging them right around 22 to 23 months, right before that. So credit inquiries do not stay on your credit history very long. All right, one of the things that we do need to talk about is when you pull your credit report, and I'm going to talk a little bit about how you can get it for free, in fact. One of the things we need you to do is to check it for accuracy. Make sure that the information on there is correct, that all those accounts are yours, that the reporting status and things are correct. If they're not correct, if you see, for example, an account that you do not know of, it could be fraud. So we would like you to initiate a dispute. Some things are easy to fix, right? Maybe you just recently moved and the credit report isn't reflecting your updated address. Things along in that sense, maybe somebody entered your social security number wrong or something like that. Those are things that you can fix fairly easy. Other things, if you are disputing an account, or let's say you are disputing the status of account, perhaps you see that one of your accounts is showing you as 30 days late and you are not 30 days late, then you would dispute that, right? Those kinds of disputes that are a little bit harder to process, where we actually have to go back to the lender to find out what happened, those can take up to about 30 to 40 days roughly to process. So you would submit the report, and a little over a month, you would get a resolution, whether or not that information was actually taken off your credit report, which in many cases, if it's an error, it's just removed from your credit report. And so you pull it again, you'll see that that account or that information is now updated or taken out. But just be aware that if you submit a dispute, we will go to the lender and see what they can respond. If they do not respond, if they ultimately after 30 days don't respond, we're going to side with you. We're going to just assume that the information is incorrect and we will remove it. So it is worth while to submit a dispute if there's incorrect information. I will caveat that with saying you can't dispute information you don't like, right? You can't say, well, I had a 30 days, but I don't want that 30 days on there anymore. You can't dispute that, because if they can prove that you actually were 30 days late, that will stay on your credit report. You dispute information that is incorrect, that is not true, that is not yours, that is wrong in some way. You may also add something called a statement of dispute. If you disagree with the result of a dispute, if you dispute something, or there's just something you want to explain to your lenders, you can actually add a statement of dispute. You can write in a sentence or two that says, that explains something that happened, so that a lender, when they're pulling your credit report, if they see something, perhaps it's negative, you can explain it, right? There are lots of things that you can do to explain. Perhaps, you were laid off. Perhaps you were affected by COVID, right? That's something that's happening a lot right now. Maybe you were ill for a particular time and you fell behind on some accounts, and now you're catching up. Those are kinds of things that you can add statements. Just be aware that those statements do not change the calculation of a score, because they are written, not numeric values. So the score will still be calculated based on what's on your credit report, late payments and all. But at least this way, it allows you to communicate with the lenders who are looking at your credit report, kind of explain your side of what's going on. All right, let's talk a little bit about credit scores. So everything we talked about so far is your credit report. It's that long list of all your accounts. And while lenders do pull credit reports so that they can see, what your history kind of looks like, a lot of them actually rely on credit scores to determine whether or not they're going to approve you or not, whether they're going to extend that loan, whether they're going to, how much they set their limits for, and things along those lines. A credit score is simply an algorithm. It's a mathematical formula that can scan through your credit report and pull out pertinent information to determine one thing. And that determination is, what's the likelihood that you as a consumer are going to default on a loan? Defaulting on a loan means that you go 90 days or more without making your bill, without making your payment, in which case most lenders will close the account. Usually they'll charge it off or send it to collections and that sort of thing. That is what default is, 90 days or more past due on an account. And they're basically looking to see if, given your credit history, are you very likely to default? That, are you, for example, really, debt burdened? Have you gone 90 days or more, or gone late on other accounts? They're just looking to see whether or not your profile looks like somebody who's going to default or somebody not going to default. So it's not saying that you will, it's just saying that maybe compared to somebody else, you're more likely, less likely to default. And that's what the score is representing. The lower the score, typically, the higher your probability of default is, right? So it tells the lender that you're a little bit more high risk than somebody else. And the higher the score, the better it is for you. So obviously you always want a good high score, whichever model you're using. Now, but be aware though, that lenders use a variety of different scores. There isn't just one score. FICO perhaps is one of the most well-known brands, but even FICO has dozens, maybe even hundreds of different scores out there. So there isn't just a single one. Sometimes you might pull a score and say, oh, I have a score of, 780. And then you go to a lender and they pull your score and it comes back as 650. And you're like, well, wait a minute, I just pulled my score. It isn't the same one because it isn't the same model. But I will tell you that most models do they kind of run under the same premise. They're still looking for this behavior on credit history that would point to somebody who defaults. So while you might end up with different scoring numbers, for the most part, a lot of these risk scores are looking for similar things, okay? So, you know, we get this question all the time. If lenders are using different models, how to fix my score, how to improve my score if I don't know which model they're going to be using. And the way you do that is based on what's known as risk factors. So anytime a lender pulls your credit report and runs a score, right? It doesn't matter if it's the FICO 2 for auto, it could be the Vantage Score 4, it can be their own custom models, it doesn't matter what it is. When they're making a decision based on a credit score, and you didn't score really high, or they actually had to take what's known as adverse action, and maybe they didn't approve your loan, or maybe they did approve your loan, but they didn't give you the best term, right? The best credit, the best interest rate, or maybe they didn't give you the loan amount that you were asking for. Those are all called adverse actions. They need to send you a letter that tells you why they made that decision, what model they used, what score you got, and they will give you what are known as risk factor codes. It is the 4 top reasons why your score was impacted in a negative way. Okay, if you have a really, really high score, by the way, let's say you score upwards of 800, sometimes you don't get 4 reasons because you just don't have enough reasons why your score was low, because your score was actually, in fact, quite high. But sometimes you'll get minimal reasons. But at least you will have 4 codes that will tell you what could you do to improve your score, what was affecting your score. And just so that you know, those score factors are presented to you in hierarchical value, in order. Okay, that means that the top reason is the one that impacts your score the most. The second one, second most, third one, third most, etc. So what you do to improve your score is you look at those score factors and you do the opposite. So if the top reason says you didn't score well because let's say you have a late payment on your credit card, okay? Go and pay that late payment, bring it up to speed, or bring it up to date, and then look at the next reason. Let's say the next reason is you have a thin file, right, or a young file. You don't have a lot of credit history. That one you just kind of have to wait, because that just goes away over time. Eventually it falls off, especially if you have a very young file. Let's say you only have credit history maybe 3 or 4 years. That one tends to show up a lot, and eventually it will fall off. But you just need to do the opposite of what it says. So occasionally it'll say something like you don't have any credit cards. So if you open a credit card, that will impact that score factor. Or if you don't have a mortgage, it might show up. Many different reasons. Just look at them and see what you could do to do the opposite of it, right? And in some cases, it's just a matter of waiting it out. But that is how you address those concerns. Because as you address them, the next time you pull your credit report, you might get different score factor codes. So address those and keep improving, and ultimately your score will go up if you address those risk factors that are being presented on those adverse action pieces. I don't know the FICO formula because they don't give it to us, but I do know the Vantage Score formula. Right? Vantage Score is another very typically used generic credit score that's used, millions and millions of times throughout the year. I think it was up to 18 million records are being processed through Vantage Score. So it's a very commonly used score. You may have heard of it, you may not have, depending on who your lenders are. But I'm showing you what impacts Vantage Score because it's very same kind of percentages for other models. Not always. So they all have a slightly different formula, and these percentages are going to be a little bit different. But what I wanted to show you here is that the number one thing that affects almost all credit scores the most is your payment history, whether or not you are paying on time or not. And the reason I'm kind of calling this out is if you're going to do anything to protect your score and you protect your credit history, it's make your payments on time. Whether that means setting up automatic payments, doing whatever so that you don't even accidentally go 30 days late, because that will ding your score. while that is very, very important, and making sure that you always make that minimum, at least the minimum payment, by the way. You can always make more than your minimum payment, of course. I mean, the more you pay, the better it is because your balances start going down further. But at the very least, pay your minimum payment, because if you make the minimum payment for every month, you will get a C, or for current, on your credit status. What you don't want is a 30-day, a 60-day, or a 90-day on your credit history. You want that C for current. Besides payment history, even though it's the most important thing, you will notice that there are other things that do impact what's not payment history. I do hear a lot of people who tell me, I've never been late on any account. Why don't I have a perfect score? Because it's not just based on payment history. There are other things that impact your score. Things like balances and utilization. What does that mean? How much debt you have, right? How much, you know, do you have a lot of debt or do you have little debt? Utilization means how much of your account are you using? If you have a credit card that has a $10,000 limit and you have charged up $9,000 on it, you are very, very close to your limit. You are close to maxing out that credit card. That doesn't look good, right? You want low utilization. In fact, I'll tell you, almost every credit model is looking for 30% or less utilization on your credit card. So if you have a $10,000 credit card, if you keep that balance under $3,000, you're going to be fine. It would be as if you had, you know, no balance. It doesn't matter, right? Up to 30%, it's considered good utilization. When you go from 30 to 50%, it starts affecting your score. After you hit 50%, 50 to 90%, you will probably see a drop in your score. And once you hit 90%, most lenders consider 90% or more to be maxed out, and that will definitely ding your credit score. So try to keep those utilizations under 30. Also, if you see here 21%, at least on the Vantage score, and it varies for the other models, but depth of credit, what kinds of accounts do you have, and how long you've had your credit history definitely impacts your score. And here is one area where the older the better. The older the credit history, always better. It's never a negative to have a deeper credit history. It's definitely worse if you have a very, very new credit report because lenders just don't have enough information to determine whether you're at high risk or low risk. And also be aware that the average credit history is over 11 years old. So even if you've had credit for, let's say, 8 or 9 years, and you're thinking, that's a good credit history, you still might see that credit, what do you call it, score factor code that says your credit is too new or you don't have enough credit. You might think, well, you know, almost 10 years, that's great. Well, it's still below the average. You know, my credit history is going on 28 years now, so I've had 30 years actually. So, you know, it takes a while to build a really good credit history. It's not just a few years. All right. Let's talk about things you can do to improve your credit. All right. First thing you want to do, check your credit report often. Look for fraud. Look for errors that you can dispute. We'll talk to you in a second how you can get this credit report and where you can check it often. Do whatever you can not to be late. Set up auto pay, at least the minimums, preferably more, but don't be late because that 30 days, even if you pay it off, eventually that 30-day late still stays on for the next 7 years and it can affect your score. So be very careful about that. Paying down your revolving debt, your credit card debt to below 30% utilization is always going to be a way to improve your score. Another way to keep that utilization, by the way, is not just paying down those the balances, which obviously is good, but also you can increase your credit card limits. So if your credit is good, you can actually ask your credit card issuers to up your limits, right? So let's say you have a $5,000 card and you want, you can ask them, especially if you've been a good customer to them and you pay your bills on time, you can say, hey, I'd like to raise that credit limit. And most of the time they will do it if you've shown to be a good credit risk for them because they want you to use their card. Remember, they don't make money unless you use that card. So increasing your limits is also a way of improving your utilization. By the same token, the reverse is true. Be very, very careful when you close accounts. I'm not saying you shouldn't close accounts. You should definitely close any account that doesn't make sense for you. If you're not using it, the bill, the payments are too high, or the annual fee is too high, or something like that. If you don't like the account, sure, close it. But just be aware that every time you do close an account, especially a revolving account, and by revolving I mean things like credit cards, lines of credit, and things like that, right? Or retail cards, whatnot. Whenever you close a revolving account, you are impacting your utilization, because now utilization is your balance to credit limit ratio. So that's your balance divided by your credit limit. Your balance is $5,000 on a $10,000 credit limit. You have 50% utilization, right? 5,000 divided by 10,000. If you change and close an account, your denominator in that ratio goes down. And even if you didn't make a single, didn't add any more debt to it, your utilization could go up just because you closed that account. So just be careful about which cards you're going to close. And on the flip side, also be careful about which accounts you open. Get the loans that you need, that's not an issue. But if you're going to get several accounts, try not to do them all at one time. It doesn't look good. It makes it look like you kind of are desperate for credit. So as you're building credit history, go ahead, open several accounts. You can have multiple credit cards, you can have multiple loans, but just try not to do them all at one time, because that can lower your score. Spread them out a little bit. That's a better strategy if you can. And always have a mix of accounts. Remember, we were talking about credit scores and what they're looking for. That depth of credit means more than just how long you've had your credit history. It's what kinds of accounts you have. So let's say you only have 2 credit cards on your account. That's it. That's all you have. Well, lenders don't see how you behave on other types of accounts. Or if you only have a student loan on your credit history, it doesn't show them how you pay on credit cards. So what you want, ideally, right, if you're going towards that great credit score, is you're going to have a mix of accounts. You're going to have some revolving, some installments, mortgages. All right, having a mortgage is one of the best things you can have on your credit report, especially if you pay it on time, because what that tells the lender is that somebody else is willing to give you a substantial amount of money to buy a house, right? So having a mortgage is always a nice thing to have on your credit report, and will generally boost your score. Keep track of your score. Keep track of your score factor codes, those reasons, right? And keep addressing them. Keep checking them. Keep, like I said, doing the opposite of what the score factor reason is telling you, so that you can improve your score. Another way to help improve your credit, I'm just going to let you know that it's out there. You probably have heard it, because like, you can't even watch TV without seeing one of these commercials. Experian Boost also offers you another way to help, fatten up your credit history, especially if you have young history or thin history, or for young people who are just starting out. It is a way to help increase your credit history and increase your score. I will talk about it in just a second. In addition to that, you can also have your rental payments reported to your credit history. So let's say you don't have a mortgage, you haven't actually bought a house, but you are making regular rent payments and you're paying on time. Why not benefit from that history? I'm giving you a link here. There is a way that your landlord can report your rental payments, and it will show, not quite like a mortgage, but it will show that you are making a payment on a regular basis, and it can help build that credit history. Go to Experian.com/build credit history. You'll get more information on how your landlord can actually report those payments. While we're talking about rent, as you know, we are entering, well, we have been actually for the last year, into an unusual time. The COVID pandemic has really affected the economy. It has impacted people's ability to work. Shutdowns and a lot of people are unemployed. This has really affected and impacted the economy and a lot of people's ability to pay. So the CARES Act, which was signed back in March of last year, is a way to help consumers stay afloat, right? So if you are impacted by COVID, if you are one of those people who lost their jobs or had reduced hours and things like that, you can, through the CARES Act, you can work with your lender to what's called an accommodation. And what that means is the lender can basically defer your loan for a little bit, right? Deferment or forbearance or some payment holiday. They can tell you that for a period of time, you don't have to make payments. They will basically set your scheduled payment. Instead of being, let's say, $200, they could set that scheduled payment to $0. It's not indefinite. and be aware that at some point that outstanding debt is still due. You just have to pay it later. And you need to be aware that if you are asking for CARES Act accommodations, which is great because that's how you protect your credit during this bad time, you will at some point have to resume those payments. So plan for that. Be aware that you will at some point have to pay. It's not forgiving your loans. It's not wiping out your loans. It's just delaying the payment of those loans. This also impacts back rent. Okay, I just wanted to mention real quick that the moratorium against being evicted for rent, right? So the CDC basically said that for a particular period of time, houses that are backed by the federal government, they can't evict you, okay, if you can't pay your rent. And that is, the CDC issued it because obviously we don't want a lot of people losing their homes. Homeless situations can really impact the virus itself. So they wanted people to stay put, right? And that's what the moratorium against evictions is. And in many cases, you don't have to pay the rent, but eventually you do have to pay it. So be aware that at some point that rent will come due, and you'll still have to work with your lender to not only start paying your rent again when the time comes, but also how to pay that back rent. And each state has its own kind of rules on how that is going to be accomplished. Here in California, I think the last thing I read was when you start making your payments again on your rent, you also have to pay 25% of your back rent, which obviously could be pretty big. But each state has other programs that will help with that. So if that is your case, where you were not able to pay your rent during this time, definitely go to the state of California's website and find out what opportunities and what programs are available for you. Just be aware that it's not wiping out your debt, it's just delaying it. All right, Experian Boost. I mentioned this earlier. It is a program, Experian only. This is not done by the other two bureaus. This is just an Experian product. But what Experian Boost is right now, most utility companies and cell phone companies and things like that, they don't report you to the credit bureaus unless you're late, unless you default. Then they report you. So they're reporting the negative, but they're not reporting the positive. All those times that you made those bills on time, that part's not getting reported. So what we're doing is we're saying we're allowing the consumer to add that information. You can give your permission for us to add your good payment history on your cell phone bill, on your utility bills, and things like that. I think they're starting to expand that to other types of loans too, things like service agreements, right? Like Netflix and Hulu and things like that. I'm not sure if they finished that or not, but I know that they were looking into that. But it's your permission for you to add and basically fatten up your credit history. In general, we see people seeing boosts in their score because they're fattening up their credit history with good information, anywhere between 15 to 20, 25 points, even more. The average right now is 13 points. I will tell you that not everybody sees really high boosts. I didn't, because like I said, I had 30 years of credit history. So adding my cell phone did not boost it tremendously because there wasn't a lot to boost. But a young person or somebody who has a very thin file could actually see a pretty significant increase in their score, because that's what scores are looking for, right? Nice thick credit histories, nice long credit histories. The more information, the better. As long as it's good, of course. You don't want late payments. But check it out. The one nice thing about Boost is completely with your permission. If you decide you don't like it, and it didn't boost your score enough for whatever, you can actually remove it. You can take that information. You're in the driver's seat when it comes to Boost. You decide to put it on, you can decide to take it off. You don't have to worry about lenders reporting or anything like that. So anyway, if you want to, just go ahead and check it out. It's experian.com/boost. To get information. Oh, and by the way, it is free. It doesn't cost you anything to add this. I told you that I would tell you about where you could get your credit report. Annualcreditreport.com is it's a portal set up by the government to allow consumers to get access to their credit reports. You get one free credit report from each of the three bureaus. So from Equifax, Experian, and TransUnion, you get one free every 12 months. Okay. That changed recently, so I'm going to let you know about that. But you can do this to check your credit history, but you can also get your credit report if you have ever been declined for credit, you can use that credit, that declination letter, that adverse action letter, to actually get a free copy of your credit report from the bureau that provided the data from which you were declined. So you can get that as well. But be aware that when you go to annualcreditreport.com, and they're going to ask you questions to make sure it's you, and you're going to be authenticated, and they'll give you your free credit report, one from each of the 3 bureaus. They will also offer you to see if you would like to add a score to that. There is a fee for that score. That the score isn't free; it's just a credit report that's free. You don't need to get it there. I'll tell you right now. Lots and lots of lenders are giving out free scores. Lots of websites are giving out free scores. So if you want to check out your score, go to one of the many different sites. I think even Experian is offering free scores right now. So, you don't have to pay for it unless you want to, of course, but just be aware that you can get your score free in multiple places. I wanted to talk to you also about what's happening during COVID times, because remember how I was telling you just a second ago that you can get one free report from each of the 3 bureaus. Well, until April 2021, so through April of this year, you can get it once a week. You can actually check your credit report every week if you wanted to, and that's because we want to make sure that people are staying on top of it. There's a lot of information that's going around asking for an accommodation. Excuse me. You need to be able to check your credit report, so it's going to be free through every week from each of the 3 bureaus until April of this year. Okay. There are other things that are happening with regards to COVID in your credit report. If you think that you are not going to be able to pay your bill because you are being impacted by COVID, call your lender. That's what the CARES Act is for, is to help you keep your credit history. But it's not automatic. If you just stop making your payments, your lender is just going to mark you late. You're going to start getting delinquencies on your credit history. That is not good. But if you contact them and you make an agreement with them, you can have a deferment or what's known as a forbearance, a payment holiday. They will mark your account as being affected by natural disaster. Those are things that help protect your credit history. But they won't know unless you call them. There is only one case that's happening automatically, and that's if you have a federal student loan, not a private student loan, but a federal student loan that was payable. The government decided to put everybody into what's known as an administrative forbearance for your student loans. So if you look at your student loan account, if it's a federal loan, of course, you will see that your scheduled payment is set to 0. You don't have to make payments, and they just expanded that. They just it was until the December 31st of 2020, and they just extended that. I think they extended it to, can't remember if it's July or August or October of 2021. Go ahead and check that out. But you don't have to do anything to get that into accommodation. That was automatically done. If you can still make payments, do it, because right now there's no interest being accumulated. This is a great time to start paying those federal student loans down during this time. That you don't have to pay, but if you can pay, of course, starting to chip away at some of those balances, this would be a great time to do so. The last thing that I wanted to tell you is please remember, and I mentioned this before, the moratoriums on evictions do not wipe out your back rent. Moratoriums on evictions means your landlord can't kick you out during this time. They can eventually, if you don't pay your payments, they can kick you out for not making your rental payments after the moratoriums have lifted. But just be aware that the moratoriums on eviction is not the same thing as wiping your debt for rental payments, okay? As I mentioned before, you get free weekly credit reports through annualcreditreport.com through April. Take advantage of that. Your credit report won't change a lot from week to week, but it's good to keep up with it, especially if you have asked for a deferment or a forbearance or some sort of payment holiday. It's good for you to see that the lender is now reporting you correctly. So for example, you called your, let's say you called your auto lender and said, hey, I can't make my payments, and they said, no problem, we'll give you a payment holiday for the next 6 months. And so you didn't make your payment this month because you weren't supposed to. And let's say they accidentally marked you as delinquent. That's something that you want to kind of keep an eye on. And if they did incorrectly mark you as delinquent, that's something that you can dispute, right? You say, nope, I'm in accommodation. I didn't have to make my payment in January. So they can't mark you late, that kind of thing. So again, keep up with the credit reports. Just be aware that if you do extra report every single week, very little changes from week to week. Usually a monthly poll would be sufficient for you to kind of see if there are any changes that are going on to your credit report. Okay, we have 20 minutes and we're going to switch gears and we're going to talk about business credit reports. And the reason we're going to talk about this is that they're different. And a lot of people don't even know about these. What is a business credit report? Well, it's kind of like your personal credit report. Everything we've already talked about. It's your financial references, except that instead of your personal, right, John Smith's credit report, it's, you know, bakery ABC. That's it's a credit report for the business itself as a business entity. And like a credit report, it has a lot of the same kinds of pieces of information, like accounts and things like that. But instead of being credit cards or, you know, auto loans and things like that, it will be information that you use to establish credit for your business. So it'll be, you know, your suppliers, your wholesalers, manufacturers, banking, leasing companies, other kinds of lenders that will report how you are doing with them as a company, whether you're paying your bills on time as a company, okay? Whereas almost not everybody, but almost every adult person in the U.S. does have a credit history, personal credit history. I would say only about 25 million businesses in the U.S. have a separate credit. So we do want to help build that. Why is it important though? Why do you want that? Is especially if you first started out using your personal credit report to kind of secure some loans for your business, you're personally liable. So you do want to at least get your business credit started as soon as you possibly can. All right, well, what's on a business credit report? Just like it does for your personal credit information, it has identifying information. So on your personal, it's your name, address, social security number, date of birth, things like that. In your business credit report, that identifying information is your company name, your SIC code, what type of business, are you incorporated, are you an LLC, your business address, your business phone number, when you're incorporated, how many employees do you have, what are your sales? It's information on the business, okay? And then it's information on your business accounts. So just like your account trades on your personal history or personal credit report, here, your suppliers, your wholesalers, the banks, and you know whoever's holding your notes, they will tell you, they will report to the business credit report the information on that loan, right? What are the balances? What are the credit amounts? Are you paying on time? You know, just all that information that's on the account. If you are being sued, public records will also show up. So not just from the suppliers and wholesalers and your lenders, but public records will also show up, as well as inquiries, just like on your personal credit report. So your business account, if there are inquiries on your business credit report, if there are public records against your business, any account you take out in the business name will show up here. Just like your personal credit score, you have something called business credit score. A little different though than your typical FICO. For starters, they usually have different scales, right? At Experian, at least, the credit score at Experian is called the IntelliScore Plus. That's just the name of our score. Just like it could be Vantage Score, FICO, whatever. That's the name of the score. And it has a 0 to 100 scale, which is different than the typical personal credit score, which is typically 300 to 850. This one is on a 0 to 100 score. But still, the higher the score, the lower the risk. So you want a score of 100, or at least as close to 100 as you can. You don't want the lower scores. But just like with a personal credit score, there will also be risk factors that tell you what's negatively impacting your business score. So let's say you've got a score of 30, that's on the lower end. You will have your risk factors that tell you what it is about your credit business credit report that's driving that score down. It will tell you if it's because you're late, or you defaulted, or whatever the cause of that score going down. So again, you can do the opposite to help build that credit score. All right, For those of you that don't have a credit report or want to know if you have one, you can go and check it out on these two websites here to get your credit, your small business credit report if you have one. But a lot of you might say, well, what if I don't have one or I don't have one? You do need to take certain steps to start one. It's a little bit different than with your personal credit report, because usually that's started for you. But here, in order for you to start your own business report, you do need to actually have a business. You need to form your business, incorporate, or form an LLC. You do need to get a federal employee identification number. You will need to have accounts, bank accounts in the legal business name, right? Not your bank accounts, but your business's bank accounts and things like that. Also, you should set up business lines dedicated to this business. Basically, make sure that the business is an entity in its own. And then what you do is those companies that you work with for your business, you want to ask them to report and update their account information with Experian. If you go to these two websites here, smartbusinessreports.com or Experian/business credit report, you will get all the information you need in order to either get your credit report or start your credit history. And just like with your personal credit report, you can get a free credit report if you've been declined. However, the annual creditreport.com law, when it says you're allowed to get a free credit report once a year from each of the 3 bureaus, does not apply to businesses. You most likely will have to pay for one if you're just curious to get it. And again, if you buy a score, you would have to pay for that. So it is slightly different than the annual creditreport.com if you're pulling your business credit report, okay? So question I get a lot is, aren't they the same thing? Isn't your personal and your business credit report the same thing? And the answer is no, they are not the same thing, but they can be related if you use your personal credit to secure your business debt. Sometimes before your business is big enough or established enough, and you can't get credit in the name of the business yet, you will use your own personal credit history, your own name to open some accounts. So you might get a business card, a credit card, a line of credit, and you will secure it under your own personal credit report. That will show up on your personal credit report. By the way, it will show up as a business loan on your personal credit report. And it's typical, it happens a lot, it's not something that's wrong, but as soon as you can, build your business credit report so you can start moving all those accounts in that direction, because now you're not personally liable for those. If your business is falling behind or getting a little late on some payments, it's not going to affect your personal credit report if it isn't on your personal credit history. Okay, so that's one of the reasons why it's very, very important. Okay. In the United States, most businesses are small. The big companies are not the typical. It's most people have small, private, little businesses. So most of these small businesses don't have their own credit history. And most business owners, especially sole proprietors and things like that, these smaller businesses, they will use your private personal credit report to secure these loans, but then you become liable. So be careful, right? You want to extend that business credit report as soon as you possibly can, okay? If you do have an Experian business credit report, and let's say you did pull it and you're looking at it, and the same information or same thing I'm going to tell you about your personal credit report, if you see something that's wrong, incorrect, an account that doesn't belong to you, could be a mistake, a clerical error, you have a way of disputing that information. Okay, so after you first get your credit report, take a look at it, review it, make sure that it's correct. If there's incorrect demographic information, like the identifying information, that's easy. Go to businesscreditfacts.com, you'll be able to update it directly there. If you're submitting something else, if you're submitting a dispute against a supplier, a wholesaler, or somebody who's reporting to your credit report that's incorrect, you will have instructions provided on the report, just like you had the dispute information, and we will process that in the same way we would do your personal credit report. It takes about 30 days to resolve the issue, but there is a process in place to fix any errors in your business credit report, just like in your personal credit report. Resources when it comes to the business side, okay? I'm giving you some websites here for you to check out some information on how to pull your credit report. I'm also giving you the website here for how to pull your credit history for your personal self. Remember, you can go weekly now. Experian has a lot of credit information. If you go to experian.com/credit education, then we have some blogs called Ask Experian. There is so much information out here on how to improve your credit score, how to improve your credit history, how to build that credit history the right way. Go check it out, and then go to businesscreditfacts.com to help figure out and how to build and improve your business credit report. Okay, and remember, these are separate, these are different things, and you want to get that business credit report as soon as you possibly can. Okay, I think, yeah, that is the last of it. Did we end up with some time? Oh, we have 4 minutes left. Were there any questions that were submitted, Edna?
Yes, there's actually 2. So one of them, it says, does the statement of dispute allow you to reopen the dispute? Also, does the statement show up on your credit report, since it was stated that this helps to tell your side of the story?
It does show up on your credit report. It does not open up a new dispute. So after a dispute is resolved, you can't reopen it unless you have new information. But the statement itself does not open up a new dispute, because that's a different process. All it does is it is a way for you to tell your side of the story, to give your reasons. Because if not, it just looks like, maybe it just looks like a late payment or something like that, right? This way you can say what happened. It does show up on your credit report. If you see it, you will see it right underneath the account. It'll, whatever you say, you know, let's say you said, I don't know, I was late on this account for the following reasons. You can put that and it'll show up on your credit report when they pull it.
Next question, can we get our business credit report for free?
You can get it for free if you were declined for credit, but not normally. See, this creditReport.com is only for personal. Let me get back to that. Only for personal credit reports. But if you have been declined for business credit, you can use that adverse action letter, just like you do with your personal account. If you've been declined for credit, you can also request your free credit report. You can use that to get your Experian credit report for free if you've been declined. If not, just go on there. By the way, it's not expensive. I'm not exactly sure what the price is right now, but it's not like, you know, massively expensive. If you just want to get your credit report to keep, you know, to keep up with it and make sure that it's up to date. Okay. Well, if that was all the questions, that was pretty easy then. Okay.
Thank you, Veronica. We really appreciate the partnership once again with Experian and all your great insight into credit for both personal and business. And we hope thank you everybody for being on the call today, and we hope everybody stays safe and healthy out there. Thank you.
Yes. Thank you.
Take care.
All right.
Bye-bye.
Bye-bye.